What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Hello, everybody. Happy Sunday. I hope you're all having a good weekend. As you guys know, normally on a Sunday, I don't put up an episode. Sometimes I do if there's some sort of major development that we need to touch on, but I try to take Sundays off. But as some of you guys also know, I like to, on occasion, do a deep dive into a particular topic. Monday to Friday, there's so much happening, it's very difficult to get everything in. In fact, I have to cut most stuff out, so then it's still the episodes are still accessible and digestible. I want to try and keep them between 8 to 10 12 minutes max for you guys, but every once in a while I like to do a bit of a deep dive or look at one specific area, because in following China there are developments that are tied to a broader sort of process or phenomena that continues for months. Of course, we've been following the Evergrande crisis since it exploded last year, but one of the things we've also been following is land sales, and I think land sales is very important to follow. So this episode is going to look at land sales specifically. I also wanted to take this opportunity, since it's a Sunday, it's a bit more laid back, to thank everyone. Thank you guys who have been supporting me, some for months now, some for years now, but for everyone who's been very supportive of the channel. I haven't actually had an opportunity to really express my gratitude and thank you guys. So I just want to take this opportunity to thank everyone too. Thank you very much. When I started this, I thought that it would be a success if 200 or 300 people subscribed to the channel, and now I'm seeing 2,000 to 3,000 new subscribers a month, so it's pretty amazing. Thank you very much. Now, without any further ado, that's a very long introduction, my apologies, let's jump in. We've been following the startling collapse in sales of land use rights across the country for several months now. These phenomena are critical because it signals the health of future property development and also is directly tied to local government revenue, in some cases representing over half of local income for officials and local governments that have responsibilities, including maintaining politically set growth rates. Indeed, just yesterday, Chinese financial expert at Peking University, Michael Pettis, agreed that sluggish land use auctions could drag down investment in real estate development, squeeze the fiscal revenue of local governments, and affect the solvency of local government financing vehicles. These are all themes that we've been following very closely throughout this Evergrande crisis over the last half a year at this point, and these are key ideas we always have to keep in mind when we look at land auction data. Over the last week, we got a lot more data and accompanying reports about land use rights sales, which I'll call land sales for brevity through the rest of the video. All land in China is owned by the government, of course, which sells land use rights to developers in the form of leases lasting as long as 70 years. Now that we have a more granular understanding of the acuteness of this issue and the details surrounding land sales in different regions, because there is some disparity across the country, we can really dive into it. Among the provinces and provincial level regions that reported land sales data in 2021, Yunnan, Hebei, Guangdong, Jiangxi and Fujian, and the Chongqing provincial level municipality recorded lower revenue for land auctions compared with 2020. Now keep in mind, huge collapses in sales didn't really kick in until the Evergrande crisis later in 2021. And as we remember from earlier in the week, sales remain painfully weak in January of this year. We remember that private developers only purchased a little over 20% of land in January, forcing state-owned enterprises and local government financing vehicles to step in and fill the void to maintain land prices and local government revenue. Now going back to the data, the biggest decline was in Yunnan province in the southwest of the country, which sold about 90 billion RMB, about $14.3 billion US dollars of land last year, down 35% from 2020. Hebei province, which hugs the capital, Beijing, declined 11.2%. On Friday, Yuekai Securities Co. Limited expressed in a research note that due to different fiscal situations and debt ratios across the country, the impact on regional economies varies, and we're going to touch on this analysis later in the video. But first, it's important to note this point about the regional differences. Some regions are in deep crisis, with mountains of debt, low productivity, and a collapse in revenue. However, the more dynamic regions around the Pearl and Yangtze River deltas, for example, still enjoy relatively strong fundamentals and real demand. So while they will see slowdown and maybe temporary pain, it shouldn't be as painful as the less dynamic regions, which still represent populations of hundreds of millions of people. Indeed, one likely outcome of all this will be intensifying geographic disparities and the accompanying political fallout of this, a theme China has seen often in its history. Now again, let's go back to the data. Chinese financial media outlet Caixin reports that local governments are pessimistic about the auction outlook for the year. Several provinces lowered their budget targets for land sales revenue, with Beijing, Shanghai, and Zhejiang all expecting declines of at least 10%. This is a big deal. These regions are major engines. Anhui, which hugs the Yangtze River Delta but is recognized as a poorer province, set a budget target of 3.9% growth, significantly lower than the 13.2% growth that we saw in 2021, Caixin points out. Hainan, Yunnan, and Hebei projected increases in land sales this year due to a low base in 2021, which we just covered, but still down from previous years. The article continues by observing that some provinces haven't yet reported land use sales data, but 2021 budget revenue in Liaoning in the northeast, Inner Mongolia, also in the northeast and the north, and Hainan Island in the south, showed declines of 11.2% to 59.9%. And this is critical. Now quoting Caixin analysts, quote, given that land sales typically account for 80 to 90% of government revenue, this suggests that land use auctions in those provinces were also sluggish, end quote. So just think about that. For some of these regions, land sales, which depend on growth in property development, represent 80 to 90% of government revenue. That is quite alarming. According to consulting firm China Index Holdings, speaking to financial media, as private property businesses have been reluctant to bid, state-owned enterprises, including local government financing vehicles, have stepped in to underpin the market. This is consistent with what we have been discussing and following on China Update here for well over a month now. It continues to point out the consulting firm in 9 of 21 large Chinese cities that packed in land sales over the last 2 months of 2021, at least half of the plots were brought by local government financing vehicles. This is what we covered earlier in the week. Now going back to Kai Securities and their research note, I think what they observed in that note, the distillation is probably one of the best articulations of the crux of what all this means for the economy going forward. And this is a conservative position. Things could get much worse. Quote, in Tianjin and other regions with high dependence on land sales and high government debt ratios, the weaker financing ability of local governments could lead to an increase in local government financing vehicle risk. In Zhejiang, Guangdong, Shanghai, and other regions with low debt ratios, the decrease in income from land deals will have a greater impact on local infrastructure investment. In Yunnan, Liaoning, Inner Mongolia, and Qinghai, this is a province in the center of the country, which face continuous population outflows and economic slowdowns, local government will have no choice but to relieve the fiscal pressure by issuing bonds. End quote. In 2021, China's total revenue from land auctions increased 3.5% to 8.7 trillion RMB, the lowest level rise in history, better only than 2012 and 2015. 2022 may well be worse. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.